100% of what I do is self-storage based. So I'm going to try to brainwash everybody here tonight into thinking that self-storage is really one of the best asset classes for hands-on investment, passive investment, just general investment for making money, getting a good return on your investment. So quick little bio on me is you guys heard, I'm based in Austin, Texas. I own the company, Bellomy Company. I've got two other partners. We've got an office in Houston and an office in Atlanta. 100% of what we do is self-storage facilities. We've done business in 28 different states. 100% of what we do is self-storage facilities. So most of what we do is we sell storage facilities. We also arrange financing. So someone will come to us and they'll say, I really want to buy this storage facility. How do I get a loan? We've got a relationship with all the top lenders of self-storage facilities, so we'll go help people get debt to buy a storage facility. We'll also help people raise equity. So we'll help somebody that says, hey, I've got a storage facility, I've got a loan, I need some equity to go buy this storage facility. So we do entire capital stack related to self-storage transactions. I'm going to be clicking back and forth, and if anybody's got questions, just feel free to interrupt. So a couple topics we'll talk about this evening. My self-storage experience alluded to that. Who owns storage facilities? So as you're driving around, you see big, shiny new facilities. You'll see public storage, extra space. You'll see some small, rundown storage facilities. Who's the average owner of a self-storage facility? We'll talk about that. Economic drivers of self-storage facilities. Okay, raise your hand. Who here has stored in a storage facility before? Whoa. That's impressive. Okay, in Texas, maybe 4 or 5 people. So that makes me feel good job security. So keep storing. But I'll be curious on why you actually ended up putting your stuff in storage, and I'll talk about some economic drivers of what compels people to use storage facilities. I think this will be most interesting for this group. Self-storage compared to other asset classes. So as an investment, how does storage compare to apartments, single-family residential, retail? Compare and contrast. Current industry economics, and then most importantly, how do you find a deal? How do you find a good deal? What does a good deal look like? We'll talk a little bit about that. So quick background on me again. I actually grew up in the business. So my first high school job, I was the manager of a storage facility. So when you went, you rented a unit, somebody sold you a lot, they helped you fill out a lease, they swept out your unit. I grew up doing that. So I've been in the business for a long time, wear a lot of different hats. So what is self-storage? Okay, there's a lot of different perceptions of what an actual storage facility is. We sell all shapes, sizes, nice ones, ugly ones. We've sold a guy that's got a full-car garage as a storage facility. We've also sold some pretty nice ones. So there's a good picture of kind of some new generation, clean, aesthetically pleasing storage facility looks like. There's wine storage, right? So you got storage facilities. Nowadays, storage facilities are being built with wine storage. We can talk a little bit about that. There's a shiny product, right? It's getting kind of away from the conventional just roll-up doors. That's what most people perceive storage is. 4 walls, a roll-up door, a bunch of junk, and maybe a metal roof that may or may not leak. Here's what everybody else is a little bit more accustomed to. And then I had to throw this picture in there, especially being in San Francisco. So, hold on. Walmart Supercenter. So why would I have that up there? You want to take a guess? Pictures of storage facilities? Close. People are turning them into storage facilities. So, really kind of interesting, we hear about this retail apocalypse in Sears, Kmart, Macy's. They're going out of business. Well, what's happening to the real estate? People are buying them and converting them to storage facilities. Being in San Francisco, I had to have this picture. We call this the Apple Store storage facility. Cleanest, nicest, fanciest, and you're almost, you want to get dressed up going into it. But kind of a new dimension of what storage facilities are looking like. So who owns storage facilities? Okay, a lot of our clients are publicly traded companies, are pension funds, are endowments, are insurance companies, Wall Street firms, Goldman Sachs, JP Morgan. You'd be surprised at all the different sophistication levels and companies that own storage facilities. They're the three biggest everybody's accustomed to. Public storage, they started in Pasadena, California. They've got 3,000 plus facilities. Extra Space Storage, they're based in Utah, and CubeSmart. Those are the three largest storage facilities in the country. Who here has rented a U-Haul before? You know that U-Haul owns 3,000 self-storage facilities? Yeah. They're a storage company that's got a little side business of renting trucks. So here's a couple examples of other owners of storage facilities. And then a big component of our business is what we call mom and pop investors. Husband and wives, two friends, two buddies from a country club, drinking buddies, looking to buy storage facilities, make a little money, own some real estate, and watch it appreciate.
For it to make sense, we would need to add investors and look at a larger...
So, I was shocked at how many people raised their hand. They said that they storage. But I'm in Texas, it's 4 or 5. So again, I feel really good about my future job prospects. Maybe only in California. So when somebody comes to me and says, why do people put their stuff in storage? It comes back to just common life events. Death, maybe downsizing. You're going from a big McMansion in the suburbs to moving closer to the city, going from 5,000 square feet to 2,000 square feet. You don't want to get rid of all your stuff, so you put it in storage. Okay? Moving, that's a big one. People change cities for careers. Before you find permanent housing, you're going to put your stuff in storage. Okay? Students, that's a big component of storage facilities. They typically do real well in university towns. Students, 9 months out of the year, they got a place to live, place to store their stuff. 3 months out of the year, they go home, go find a job, have an intern, put their stuff in storage. And then military, troops moving overseas, traveling. Those are kind of some of the big components of what actually drives and compels people to use storage facilities. I just like to say life events.
So the options are...
So why does somebody stay in storage? Okay, so if you polled the average manager at a storage facility, when a prospective tenant walks in the door, the manager, the first question they're going to say is, what are you storing? And how long are you going to store? Anybody know what the average answer is to how long someone's going to stay in storage?
3 months.
You got it. It's a smart crowd. 3 months. Okay. So the average tenant walks in there and says, here's what I'm going to store, household goods, moving supplies, furniture. I'm only going to be here 3 months. That average tenant that says they're going to stay there for 3 months, you know how many months they actually end up staying? 18. Okay. Again, I have a job. Don't tell people that little secret. The reason being is because once you put your stuff in storage, you forget about it. It's easy. You get on a monthly billing system, first of the month, your credit card's debited, you forget about it. It's kind of like a gym membership, right? You sign up at the gym, they charge you $100 a month. 2 years later, you say, I'm $215 for that gym membership I haven't used in 8 months. Very similar. So one of the most compelling reasons that I think makes storage a good investment, especially for long term, people, they put their stuff in storage, they think they're going to be a short time, it's so easy and convenient, they leave it in there for a lot longer.
That's like a lot. I mean, that's like...
So real estate people here, a lot of different ways to invest in real estate, a lot of different ways to invest in commercial real estate. So you've got apartments, you got hotels, office land, marinas, mobile parks, RV parks, single family residential. A lot of different asset types. When I go to a conference and I go to some sort of real estate seminar and I tell people all your self-storage facilities, I get a lot of, you can do that? There's enough? And then what they usually say is they say, so do you sell an individual unit? No, we sell the entire complex. And I think the reason why is, as an asset class, storage isn't very sexy, right? I mean, it's a lot cooler to say, I own that apartment complex, or I own that shopping center with a Starbucks, or I own that office building, right? Storage is kind of boring. It's not very attractive. It's industrial looking, roll-up garages. So it hasn't gotten a lot of mainstream attention or mainstream investment, which I think is good for finding deals and finding opportunities, right? Apartment complex comes up for sale around the corner. There's going to be 500 people that want to buy it. Self-storage facility comes up for sale around the corner in this neighborhood. Most people are going to say, hey, I thought that's just some industrial rundown building. So it's not as competitive to find deals, to buy deals, because it's not as attractive as an asset class to brag about and say y'all. But again, I think that's a good opportunity for people looking to invest.
You're going to have to bet one way or the other.
Okay, I call this the tail of the tape. This is if I had to have one spreadsheet to brainwash people into explaining why I think self-storage is a better asset class than a lot of these other ones. Here's a good example why. I'll hit the highlights. So I took an average deal size across 6 different asset classes. A $2 million storage facility is going to be equal in size and price and income to about a $5.5 million hotel. So let's take a look at the different categories of how you can make an apples to apples comparison of all these investments. Okay? First one, you gotta have a lease, right? You own commercial real estate, you're renting to somebody, there's gotta be a lease between the lessor and the lessee. Self-storage, your lease is month to month. So somebody, they come in, they rent, every self-storage lease is for 30 days. It automatically renews, but it's only a 30-day lease. So there's some benefits to that, but if you don't really understand, like a lot of bankers, and no offense to any bankers, no bankers here? Bankers, they don't understand why there's only a 30-day lease. Okay? I'll touch on that in a second. Single-family residential. Ballparking maybe 6 to 12 months, maybe you're kind of in transition, you're renting a single-family residential month to month, but I'm going to say on average 6 to 12 months. Apartments, 9 to 18 months, your average apartment lease. Office building, you're going to go sign a tenant to a 2,000, 10,000 square foot lease. They want to know that they're going to be in that spot for at least a year, maybe 10 years. Shopping center, Starbucks, Burger King, nail salon, donut shop. They're going to be in that location. They want to know that they can be there for 1 to 5 years. Hotel, daily. So what does that mean as far as these 6 types of investments as a hedge against inflation? Okay, so monetary supply increases, price of goods and services increases. How do you keep up with inflation? You raise your prices.
I don't remember it.
Well, if you're in an office building that's got a 5-year lease, inflation starts to pick up. You can't do anything about it. You signed a 5-year lease or a 10-year lease. Shopping center, same deal. Starbucks, you signed that lease 2 years ago. They got 6 years left on it. You can't raise those prices. What if the neighborhood drastically appreciates? You're stuck in a long-term lease. With self-storage, inflation, monetary supply picks up, you've only got a 30-day lease. So as far as the hedging against inflation, self-storage is the second best. The first is hotels. They can change the rates hourly, daily, you name it. Okay? Number of tenants. Average $2 million storage facility. You're going to have, that's probably a little light, 100 different tenants. Okay? So again, might be good, might be bad. I'll elaborate on that in just a second. Single family residential, 1 tenant. Duplex, maybe 2-3 tenants. Apartments, average deal size, $4 million apartment, depending on where you are, 50 to 100 tenants. Office building, 15 to 20 tenants. Shopping center, 5 to 10 tenants. Hotel, 150 keys, customers. Okay, so just came out of recession, 2008, 2009. Economy slows down, businesses cut back, some businesses go out of business. So you own an $8 million office building with 15 tenants. Say 2 of them have to go out of business. So 2 tenants out of 15 go out of business. It's about 6.5% of your tenants. That 6.5% of your tenants could be 30% of your revenue, right? Shopping center. Average shopping center, retail strip center, you got 5 tenants. Say one of their lease comes up for renewal, they want to move to the other side of town. So you only are 80% occupied. You got to go find a tenant to replace them. What if one goes out of business? So with self-storage, your tenant base is so much more diverse. You can lose 5 tenants. Right? Losing 5 tenants on an office building, that's trouble. You lose 5 tenants on your self-storage facility, maybe a 0.5% hit to your bottom line.
Yeah.
So it's a very, very diverse tenant base on 30-day leases. Okay? Now the reason I kind of made the quote about bankers is because bankers don't understand that. So you go get a loan to buy a storage facility, the bank's going to say, great, I'm going to lend you $1.5 million, show me some long-term leases. And you're going to say, no, I got 100 tenants on 30-day leases, and I don't know any of their names. So it's a little bit of an uphill battle. I'll elaborate that on some more. Financing, loan to value, simple terms. Self-storage, 75-80% loan to value. Single-family residential, I think you get financing 80-90% loan to value. Apartments, 70-80%. Office buildings, they tend to be the least leveraged asset class, so 60-70%. Shopping centers, 65-75%, and same with hotels. Okay. So here's a big one. So who here owns or invested in single-family residential, duplexes, some sort of residential, right? Toilet breaks. I mean, this isn't a fair comparison. Toilet breaks. How often do they call you?
That is not
When they call you, do they call you to say they're really happy about how things are going, there's no problems whatsoever, and they're so grateful for that great lease and that great apartment? No. They only call you when there's problems, right? Tenants, toilets, and trash. Okay? Storage, you rent a unit to somebody, you sell them a lock, that's the only thing you have to do with them. They store at their own risk. Okay? No plumbing, no complaints, no, the water doesn't work, no trash. Okay? They store at their own risk. Most of the time they don't even know who the owner is. Okay? So the category is make-ready tenant improvement. Somebody moves out of a storage unit, what kind of make-ready do you have? Sweep the unit out. If you're a really fancy facility, you get a blower. Make-ready in about 30 seconds. Single-family residential, toilets, plumbing, maybe carpet, paint. I'm going to go easy on you guys, and I'll stop there. Same with apartments, right? Throw into maybe if there's a swimming pool, having that in good condition, common area, office, tenant improvements. You got somebody that moved out of 2,000 square feet, somebody's going to move in 2,000 square feet. They say the wall looks really good over there, but we want it over there. A lot involved with make ready for an office. Shopping centers just like office. You got somebody that's in 5,000 square feet going to 2,000 square feet. The sink's over here, but they want the sink over there. Somebody's got to pay to move the sink.
I'll have to adapt my mineral.
Hotel. That's every single day. So, interesting category I want to put up there. Real estate investment trust. Typically a real estate investment trust, because their cost to borrow is cheaper than everybody else's because of the concept of scale. They've got more apartments, more storage facilities, more office buildings. Anybody, their cost of capital is cheaper, so they can pay more. So as an investment, you buy a property, you hold it, you fix it, it appreciates. You want to sell, who's going to pay the most? Typically a REIT, a publicly traded company. So I put this category here to see, as an exit, having a very, very deep-pocketed, publicly traded buyer to pay you a good price for your investment. You got that for every asset class except single-family residential, although that's starting to change. Default rate during the recession. A lot of studies as to coming out of 08, 09, commercial properties that went back to the bank. Okay. What asset class had the fewest defaults? Storage. Those was hotels. Another aspect I'll touch on in a little bit is financing. What asset class can you get a non-recourse loan from a bank? Storage. No single-family residential, but you can with the other asset classes. And this is also, I think, one of the biggest ones. Number of employees or management. So again, back to the deal size. We got a $2 million storage facility.
He's like the most interesting man in the world.
That facility can run with only 1 or 2 employees. Okay. If you've got single-family residential, maybe you do it yourself and you take on all the headaches. Maybe you outsource it to a management company you got to pay a month's rent to. Apartment complexes, you've got 3, 4 full-time people, maintenance, leasing agents, same with office, retail, and hotel. But the ease of management with storage compared to other asset classes, you can have that $2 million self-storage investment completely managed by 1 or 2 employees. So a lot of the storage facilities that we sell, whether it's a storage facility in Texas or a storage facility in Atlanta, Georgia, is from out-of-state people. A lot of people from California buy storage facilities in Georgia. People from New York buy storage facilities from us in New Mexico because it's very easy to manage. Okay? Caveat being 1 to 2 employees, you got to have a good one. If your $2 million investment is relying on 1 or 2 employees, not a lot of margin there. It needs to be a good employee. So that's the caveat we can address and talk about a little bit later on. Economic trend, I won't bore this with everybody, but rates of occupancies have hovered for self-storage on a macro level, 90+%. Current economic trends. So when I go to a self-storage conference or I meet other owners, most common question, topics in the industry right now that everybody's talking about, construction, new supply, right? Everywhere you go, you're seeing new apartment complexes, new shopping centers. Storage is no different. There's a lot of new facilities being built all over the country. Opportunity, but there's also some cost of concern. Cap rates. I'm going to talk about cap rates in just a little bit. That's the main economic way to price storage facilities. They're very favorable to sellers right now. Maybe we're thinking we'll bottom out and cap rates can't go lower. New money. There's a lot of what I call new money getting into storage. People who 5 years ago, they never knew what storage was. All of a sudden, they see them much more around town. They hear about how good of an investment they are. So we do a lot of business with people that say, I've owned apartment complexes for 30 years. I'm selling my apartment complex because I want to buy storage facilities because I've heard how great the asset class is. A lot of new money. All the way at the peak. Rental rates are here. Occupancy levels are here. Is there more runway to keep growing rental rates and keep growing occupancy, or we're going to start seeing a reversion of mean, law of averages take over, and rental rates soften, occupancy levels soften? So these are all the topic du jour. Most common question I get all the time is, what inning are we? Everybody wants an analogy, the baseball analogy. Are we in the 9th inning of a really strong bull market, 7th inning? And My answer changes every single day. We're 7th and a half inning, but we've been there for a long time. And it's not to say, we can't go into extra innings, a lot of extra innings. So it feels late in the cycle, but I don't know how long the cycle's going to last. All right, so most important for everybody here, how do you find a deal, right? You're real estate investors, you want to buy a storage facility, you want to get involved. How do you find a deal? Okay? Common online resources, just like an MLS service for residential, we've got them for commercial. Who are familiar with LoopNet CoStar? Yeah, great marketplace for buying and selling storage facilities. Okay, LoopNet CoStar. There's a specific one that's new and it's real good. It's called listsellstorage.com. Crency's another new one. Xceligent. Surprisingly, we've got clients buy and sell storage facilities on Craigslist. Okay, it's kind of a needle in a haystack type concept, but every once in a while when you're selling your couch or giving it away for free, check the real estate section because there might be a storage facility for sale. Couple other methods. Real estate brokers. We're unique. Our company, what I do in the sense that I specialize 100% in storage facilities. There's a couple of other companies that do that, but there's a lot of other brokers that are jack of all trades that they'll sell apartment complexes, shopping centers, storage facilities. Well, get to know commercial real estate brokers. Ask them if they've sold a storage facility before, or they've got a book of business with storage clients. But real estate brokers, I'm biased. I am one, but they can be a great helpful resource for finding a storage facility. Here's another one. Call owners directly. It's a very, very competitive market. If I'm selling a storage facility, for the most part, the owners hired me because they want to get the highest price possible. Okay? So what do? You circumvent me. I don't like saying that, but get to the owner before he picks up the phone and says, hey, Bill, go sell my storage facility for an outrageous price. Call that owner directly, okay? Mail flyers, letters. So you can buy lists of geographic areas of commercial property owners. So say, I've got family in Kansas City, or I like the Portland commercial real estate market. Figure out how to buy a list of commercial real estate owners and markets and send them a letter. I'll talk to you in a second about what that letter should say. Education networking events, state self-storage association, trade shows, lunches. There's a wealth of knowledge to get involved in the self-storage industry. There's the Inside Self-Storage Association is a great one. The SSA, the Self-Storage Association, are two big lobbying bodies dedicated just to the Self-Storage Association. There's a lot of state associations. California and Texas have the two best. So you can join the California Self-Storage Association. You don't have to own a property, and you'll get some of their resources. Texas, again, biased. They've got the best resources for people just considering getting into the industry. Getting resources, getting education. Consider joining California and or the Texas Self-Storage Association, and you'll get a lot of great education. Last thing is what I think is one of the most important. So we get a lot of phone calls from people saying, Bill, I want to buy a storage facility. Okay? Brand yourself as a buyer. So when you call an owner, when you meet with a broker, when you go to an industry event, tell people, I'm going to buy a storage facility. I've got financing lined up. Here's what I've done as far as homework, attended conferences, events. There's a lot of people that want to buy storage facilities. How can you differentiate yourself so that when you go to a broker, that broker is going to want to work for you and find you a storage facility, or that owner knows that you're qualified and realistic and done your homework on buying a storage facility. Brand yourself as a self-storage buyer when you network, when you meet other real estate agents.
Unless we just get a steal. If entrepreneur, shit's happening, new things are getting built.
Alright, you found a storage facility. You want to buy it.
And mineral wells.
How the heck do you know what it's worth? You don't want to overpay. You want to get a really good deal. So how do you know what that storage facility is worth. Who here knows what a cap rate is? Okay, so cap rate is the term most common for pricing and evaluating income-producing commercial real estate. Okay? So whether it's a storage facility or apartment complex, cap rate is the pricing mechanism to determine what the storage facility is worth. Simple definition of a cap rate is the return on your investment if you pay all cash for that investment. Okay? So I'll give you a quick example. Apartment complex, storage facility, it's got $200,000 in income. It's got $100,000 in expenses. The net operating income is $100,000. That doesn't include depreciation or debt service. Income minus expenses is $100,000. Okay. The building is for sale for $1 million. Who knows what the cap rate is? 10%. 100,000 net operating income. That's your free cash flow. Divided by the purchase price of $1 million. 100,000 divided by $1 million is 10. Okay. Let's say that the price was $2 million. Economics are the same. You got $200,000 of income, $100,000 in expenses. That's $100,000 of free cash flow to your pocket. Instead of $1 million in a 10% cap rate, the price is $2 million. What's that cap rate? 5. Okay. So my next question is, if you're a buyer, do you want a high cap rate or low cap rate?
Several hours from the airport.
You want a high. Seller wants low, right? Because at $1 million, if you put $1 million cash down, you pocketed $100,000, you earn 10% on that $1 million investment. Okay? So all I do all day, every day, when I'm sizing up deals and pricing storage facilities, what's the cap rate? Okay, there's a couple of other intangible ways to price storage facilities that are relevant. In other words, price per net rentable square foot. Okay, that's an easy benchmark as when we're comparing storage facilities. Because maybe the storage facility is not doing real well. Maybe the income is down because there's a bad manager. Okay, so the other metric that we look at is price per net rentable square foot. And I highlighted that blue. Micro and macro submarket. You want your real estate to appreciate. Is the area around it, the 1 mile, the 3 mile, the 5 mile, the city, the state, is it trending up, flat, down? That'll affect the cap rate. If you're going to go in a market that's in decline, not a lot of job growth, you're going to want a higher cap rate. If it's a storage facility around the corner that's about as safe as investment as it gets with these demographics and this population, it's going to be a real low cap rate. This is great. If anybody wants to take a picture, this is such a great, good chart, okay? Except for the fact, income should be net operating income. Okay, it's a little deceptive. So net operating income is income minus expenses, NOI. So your NOI divided by your cap rate is your price. Your price times your cap rate gives you your net operating income. So it's just simple algebra playing with formulas. There's a big chart, right? Price goes up, the NOI is the same, cap rate goes down. We just did that exercise.
I'm going through it and putting the slides in the corner. So it's decent.
Got the storage facility. You found it at a 10 cap. That's incredible. You didn't find it at a 10 cap because 10 caps don't exist. Now you got to get a loan. You got to get the thing financed. Okay. Here's a couple options. Owner financing. Okay. I put that first because that's great. It's also a little bit of a needle in a haystack concept. When somebody comes to me and they say, I want to sell my storage facility or I want to sell that apartment complex, they want their equity. They got something they want to do with it. They want to take that $1 million and go turn it into $3 million. So owner financing is very, very few and far between. SBA, Small Business Administration. Okay? Federal government is encouraging investors to buy income-producing businesses. Great resource, okay? Now I said federal government. So the analogy I like to give when you're getting an SBA loan is it's like going to the DMV to get your driver's license. You go, you know what you want to get, okay? You're going to leave. You're going to get your driver's license, but it's going to have taken a lot longer than you thought. It's going to be a little painful. You're going to be in a little bit of a bad mood, but you got your driver's license. Okay? SBA, Small Business Administration, it's a government loan. Takes longer. It's a little painful, but at the end of the day, you'll get a loan. Local regional bank financing. We get calls all the time from small, local, and big regional banks saying, we want to lend on storage facilities. We just realized how great of an asset class it is. We've been pouring all this money into apartments and shopping centers and office buildings. We looked up, we've got too many office loans. Banks are very, very competitive in this market to lend to people buying storage facilities. A lot of good terms out there for them. CMBS, Commercial Mortgage-Backed Security. So that's when you go in your storage facility for a couple years, you got it clicking, and you say, I want to put permanent non-recourse 10-year fixed debt on this property. It's a very expensive loan, okay? And the reason it's expensive, a lot of fees, a lot of prepayment penalties, is because you're going to have a fixed rate for 10 years. And it's also going to be non-recourse. You can also get 75, maybe 80% leverage. So the terms are really good, but it's going to be a little bit more expensive because the terms are so good. Talked about cap rate. Got the storage facility under contract. You got the loan. Now you got to do your due diligence. This is your window of opportunity to say, I'm buying this storage facility. I need to look under the hood. I need to find the skeletons in the closet. Because I want to make sure this facility that I'm buying for $2 million isn't really going to be worth $1.8 million. So what are you looking for in your due diligence? Okay? You want to see if there's any new facilities being built around you. It's a supply and demand business. If you're 90% full and there's a new facility around the corner that's 100,000 square feet, that 90% might start going to 86, 84%. That's going to affect the economics of the business. Okay? So that's one thing we always look for. The new facilities are being built or planned that's going to affect the one you're buying. Income verification. Right? We talked about net operating income. You're buying an income-based business. The seller or the broker says this storage facility grossed $360,000 a year in 2016. Because of that $360,000, we're going to pay $3 million. How do you know it made $360,000? The broker told you it did. The seller told you it did. Do you want to go get a $2 million loan based on what the broker and what the seller says?
Hard money loan one.
Talk about that in a second. Third-party vendors. You're going to need to get a new survey. You're going to need to get a new Phase 1 environmental report. You're going to get a property condition assessment report, just like you would if you were buying a house. What's wrong with the property? What's not wrong with the property? Make sure the property's got permits, it's got a certificate of occupancy, and its entitlement so that you're legally able to run it as a self-storage facility. So we touched on some of these. Insurance coverage.
I'd rather do one on
12 months of utilities, because you need to know what the electric bill is going to be, what the water bill is going to be, what the pest control bill is going to be.
And I think we're
Okay, so I asked that question of the broker and the owner said it's doing $360,000 in income. You like the broker, the owner seems nice. You need that extra level of certainty. How do you get it? Ask for the tax returns. We get 2-3 years tax returns for just about every storage facility we sell. Now there's some circumstances that I'll elaborate on where that might not be totally necessary. Bank statements. Deposited $30,000 a month for the last 12 months. Cool. Go to Wells Fargo, give me the last 12 months of bank statements, and I'll verify for that myself. So you can see, there's my quote. We always tell people buying a storage facility, trust but verify. Trust the broker, trust the owner, but independently verify it all.
You have notes.
Here's just a common couple of mistakes people can make, especially buying their first storage. So it's do's and don'ts. Assumptions. Okay? Assumptions that you make sure they're right. Ask for enough due diligence and closing time. Okay? I tell people it takes 60 to 75 days, start to finish, to buy, get financing, and close on a storage facility. The manager, are they included with the property or not? You got to figure that out. Okay, we got about 50, is that 15 minutes including Q&A?
No, 50 minutes presentation.
Okay, perfect. Okay. Go over a couple of numbers, math problems a little bit. Okay. Here we got a self-storage facility. It's doing $600,000 revenue, top line, gross income. Now that revenue, it's storage rental income, it's late fees, it's maybe truck rental, it's admin fees, it's selling lots and boxes. Revenue for storage facilities encompass a lot of things. You got column 1, operating expenses of $250,000. You got a net operating income of $350,000. Value added cap rate's $5 million. Value added 9% cap rate, $3.88 million. Pretty big spread. Okay. Let's say you buy that storage facility and you say, you know what, this owner was a little sloppy with his expenses. He was wasting money, spending too much on advertising. I'm going to be a better operator, more efficient. I'm going to cut expenses 8%. Seems reasonable. So instead of $250,000, you got $230,000 in expenses. Look how much value or equity you created just by decreasing expenses 8%. You can compare and contrast again, 7 versus 9% cap rates. Okay. So here's another chart. Compare and contrast in 2013, 14, 15, 16, 17 cap rates. Up, down, they fluctuate. There's a lot of things that cause cap rates to fluctuate. We won't go into details here. But they go up, they go down. You can see net operating income has gone up as well. So look how your value has fluctuated. Okay? In 2013, when you bought that storage facility, you put 25% down. Look how your equity has grown over the years based on growing your net operating income, having a little bit of cap rate appreciation. All right, we're going to size up a deal. RE/MAX self-storage, 1010 Valencia, San Francisco, California. Anybody familiar with this location? Sorry to RE/MAX offices, it's no more. Okay, one of the first things that I look at, demographics. Okay, so I want to know how many potential tenants I have within a 1 mile radius of this storage facility right here. 89,000. That is phenomenal. You won't see that anywhere in Texas. You won't see that anywhere except Manhattan. 3 mile population, even better, 560,000. Average household income, 136,000. I would show this to self-storage development, they say it's too good to be true. Okay. RE/MAX self-storage is a physical occupancy of 88%, economic occupancy of 75%. What's the difference? Physical occupancy is how much square footage is rented versus how much total square footage. You've got a 35,000 square foot storage facility. 88% of that 35,000 square feet is rented. That's your physical occupancy. You can also use physical occupancy in terms of units. You got 400 units. You got 340 of them rented. About 88% physical occupancy. Economic occupancy, we apply a dollar amount to that occupancy. So what economic occupancy is, what's the gross potential rent? What's the facility currently bringing in income? That's your economic occupancy. Simple math. Gross potential rent, 100% full, is going to bring in $40,000 a month. It collected $30,000. 75% economic occupancy. But the physical occupancy is higher. How could that be? Maybe you discounted some rates to get somebody in. Maybe you offered a little bit of a concession. Maybe you dropped your rates. Maybe you increased them. It's not uncommon at all to see a gap between physical and economic occupancy. Percentage climate control. Just another metric we look at. All right, simple math here. So it's got gross potential rent of $400,000. Okay. Vacancy was $100,000. Gross income was $300,000. Okay. 25% vacancy. The expenses were $140,000. That 47% is the expense ratio. So what I did there was I divided the expenses by the income. A healthy expense ratio is going to be anywhere between 40 to 46, 47%. So this tells me the expenses are a little bit on the high side. Maybe I can do a little bit better, get the expense on a 43%. Just another metric. It's got net operating income of $160,000, right? Income minus expenses. Those expenses, they're operating expenses. They do not include depreciation. They do not include debt service, bank payments, operating expenses. $160,000 NOI. What's the facility worth? I'll put that at the bottom. Okay. On a 6 cap, it's worth $2.66 million. 6 and a quarter, $2.56 million. 6.5 cap, 7 cap. Okay. So again, it all goes back to you're a buyer, you want a high cap rate. That seller's coming to us saying, give me a 6 cap. I'm going to take this example one step further. You use the loan to buy this storage facility. So let's look at the cash-on-cash return you would get on your investment. Down payment. Introduce you to one of these banks. You find a lender. They say, give me 20% for down payment. We'll lend you the rest. So there you can see we've got 4 different potential prices that you're going to offer to buy this storage facility. Okay? You got to have a 20% down payment, so your down payment shrinks as the price goes down. Okay. And my math is off a little, but your loan amount goes down because the purchase price goes down. I've got an interest rate of 5%. I've got a 20-year amortization. So there you've got your annual P&I, principal and interest, what you got to pay the bank every year for that loan. Our net operating income is the same no matter what you pay for it. So what NCF ADS net cash flow after debt service. So what that is, that's your net operating income minus what you pay the bank. That's your free cash flow for the year. Net cash flow after debt service. $43,000 all the way up to $59,000. Cash on cash return. That's what everybody likes. What's the return on my investment? Okay. So you buy it at a 6 cap, you got to put $533,000 down. At the end of the year, you're going to walk away with $43,000 and change. It's an 8% return on that $533,000. So you get it for a 7 cap. You put $457,000 as your down payment. The bank gives you the rest. You got your income. You got your expenses. At the end of the day, your cash flow is $160,000. You owe the bank $59,000. Your cash on cash return is 13%. Next steps, ideas. Visit a storage facility. I do this all the time when we take a new storage facility to market. I need to know what the rates are for all the competitor storage facilities. So what do? Take my jacket off. I go into the storage facility. I say I move into the area. I need to know how much a 10 by 10 and how much a 10 by 20 rents for. you'd be surprised at how much of an open book managers are. I just got the rental rates firsthand by walking in and posing as a potential tender. Okay? It's also a great way to learn the business. Rent a unit for $100 a month. Be a tenant for 30 days. Walk the facility. Don't worry. Excuse me. Explore online resources. LoopNet, CoStar, Xceligent, MLS services. Don't forget about Craigslist. Get involved. So many great associations. It's such a niche business. You'll find that for the most part, everybody's an open book. It's not where you meet an owner and you want to buy a facility in their market that they're going to be a competitor. It's a really, really open industry. A lot of good resources. The SSAs, the Self-Storage Association, ISS, Inside Self-Storage, different state associations. I've told you, California's got a great one. Texas got a great one. Join for just a year is probably $200. You'll get a lot of great resources. Come to a conference. We got 2 big conferences every single year in Las Vegas. Chris, Ryder, these guys own a facility in Texas. They're superstars. They're the ones that brought me out here. So call them, call me. Happy to be a resource. That's it?
Yeah.
Questions?
Yeah, so I read through the offering backs of, there was a new REIT that went up, and they acquired most of their stuff between like an 8 and 12 cap.
Mm-hmm.
And I spent a couple days looking around.
I'll get it.
And I couldn't find very much. We're getting, rates for like 5, but we also have to hit a preferred equity return to the investors.
Yeah.
And so it was kind of tough to do at like a 6 or a 7. I just wanted to see what sort of trends you're seeing.
Yeah, great question. So the question was, you syndicate a deal. You got to pay a preferred return to your investors. The market for a preferred return for an investor is maybe 6-8%. So cap rates are in the 5-7%. It's real tough to pay an 8% preferred return to your equity buying at a 6 cap. So what does that mean? Preferred returns we're seeing are shrinking down from investors. So investors come to you and say, hey, I want to buy a storage facility, go syndicate it. I want 8% return on my money. You go to those investors after 6 months, you say, I'm talking to brokers, I'm making offers, it's a 6 cap market. So we're seeing preferred returns for what investors are willing to accept start to shrink. But that's no different than other asset classes. That answer?
Yeah.
Yeah, I'm curious, what are the best cap rates you're seeing in the Austin market for storage units? Or does it depend too much on exactly where it is and other factors?
Great question. So what cap rates are we seeing in Austin, and there other factors that affect cap rates? So the biggest factor that affects the cap rate is you're buying an asset, you're going to invest in it. The likelihood of that investment being safe and secure long term, and also returning your money long term. Okay, so the analogy I'll get is the storage facility right here where we are, Remax Self Storage. Okay, the likelihood of this being a great area with a lot of people with high household disposable income for the long term is really good. So if I buy a storage facility here, I know it's going to be a good investment for a long term. So that means I'm going to pay a really aggressive price. Aggressive price means low cap rate. Okay. Let's say I want to get a higher cap rate. Okay. I'm going to go to a market that maybe not really good long term. Maybe it's seeing an exodus in population. Maybe it's on the decline. Okay. So the highest cap rates right now we're seeing markets like Detroit, right? Population exodus, not a lot of growth. So California, y'all's backyard right here, low cap rates. Where you'll go to a riskier market, you'll see higher cap rates. Austin is such a hot market. So many people from California, I'm sure everybody knows at least one person in this room that moved from California to Austin, right? So there's a lot of good things going on in Austin right now. Cap rates in Austin are really, really low.
Can you talk about insurance a little bit on self-storage, liability and whatnot?
Yeah, great question. So the question is insurance for storage facilities. So it's general liability, brick and mortar. So you need to insure, you'll get loss of income insurance. So let's say the storage facility burned down. Your insurance needs to cover you be able to make your mortgage and make payments. And then it needs to cover building the storage facility back up, okay? But one of the well-kept secrets of storage is that storage facility burns down, hurricane wipes it out, you're gonna have a lot of angry tenants, you have no liability at all. So every single storage lease, tenants store at their own risk. So it's one of the best kept secrets of storage is the liability and risk to the owners is very, very small.
So, for instance, they come and say it was broken into, or if it is broken into.
Happens all the time. You store at your own risk. It sucks. Hate to hear it. I'm sorry. You store at your own risk. It's written 15 different times in the lease. There's no liability whatsoever for the owner.
Okay.
Yeah. Good question.
If you had to be in a business other than self-storage, real estate, what would it be?
I have to ask my wife that.
I'm curious about that too.
Marinas. Income producing and it's waterfront real estate. Yeah, great question. I have, so the question was comparing self-storage to parking garage. Very, very similar comparison. Parking garage, short-term leases, very little overhead, right? You got a gated tenant, even that's being automated now. Long-term parking garages get redeveloped like a lot of storage facilities do. So I think these parking garages are a great asset class, except where I am in Austin, everybody takes Uber to work, and so it's really interesting to see how the ride sharing is going to affect parking garages long term. I think ride sharing is going to put pressure on them long term, but they are similar.
I was also looking at like industrial storage. I wanted to see if you had any thoughts on how that is as an asset class versus self-storage.
Question: industrial storage compared to self-storage. So that I call it the tail of the tape, how storage stacks up to every other asset class. I think the first line I put up there was the number of tenants. You got 100 tenants. So your tenant pool is diverse. You can lose 1, you can lose 5, you can lose 10, and the blip to your NOI minimal. You do industrial storage, whether it's 10 to 30, you got fewer tenants. Losing 1 or 2 of them hurts a lot more.
Can you just talk a little bit about, for instance, the investors you have that are out of state, as far as when they go to invest in self-storage, the managers and the employees that come with it? I mean, how do those tend to happen?
Great question. So you buy a storage facility, you're out of state, and how does it work with the manager? Okay.
Or the transactions you've worked on, how does that usually happen?
Yeah. So what happens is a lot of the managers of storage facilities are typically retired people. Okay, or they're low-skilled workers. They've got to be friendly. It's a retail business. It's a customer service business, right? You call storage facility when you use it online. You want it to be a friendly person. So typically they don't have job skills that make them really mobile career-wise. So typically they want to stay with the new owner. That being said, there's a real big discussion in the industry right now because a lot of them live on site, right? You can kind of go out into the suburbs, see a storage facility, maybe an apartment in the back or an apartment behind the office. And so sometimes they live there on site. And there's pros and cons that we can talk about later, but it's the biggest determinant of success or failure of a storage facility for somebody buying one out of state is the manager that they have. You've got one manager. Okay? You can steal in this business. It's tough to catch somebody. Okay? So the biggest other than location and good real estate, to success or failure of a store facility is having a good manager.
To tack on to that, my partner was asking me about, well, is it possible to completely automate that with kiosks and so forth? Is that realistic?
It is, and so the question was, can you automate it with a kiosk? And there's kiosk companies, we sell store facilities with kiosks. I like it, but going back to a retail business, you've got 100% kiosks, occupied storage facility, maybe you just have like a maintenance guy that comes once a month, checks on it. Competitor down the street or around the corner's got a nice smiling face, it's good on the phone. It puts you at a little bit of a competitive disadvantage. Now, you might save $35,000 your NOI, your cash on cash goes up, but what's the opportunity cost of that? All right, happy to connect offline, contact info, we gotta wrap it up. I know there's a pretty cool happy hour networking at a bar, I'll be there. Love talking stores, so thanks.
Thank you.
Thank you.